Another week, another portfolio review. You guys would already know if you've been watching this series. It's my favorite series to do on the channel, going over portfolios of subscribers, friends in the community, and so much more. Not only is it a great way to learn about new stocks and investing strategies, but also to promote transparency amongst the finance community, which is lacking today. Today we have the pleasure of going over CJ's portfolio from CJ Investing. I'll be sharing his investing strategy, all of his holdings, and my thoughts, and so much more. Before we get to that, make sure to check out the Dividend Stocks.drugs merchandise. The link's in the description. The best looking merchandise for any investor today. Thank you, and roll the intro.
Hello, I like money.
And hey you, right there, do you want me to go over one of your portfolios? Join the Discord link in the description and message me from there. On to the video. Alright, so you guys would know I like to always have some sort of background on the investor's goals, age, and objectives, because my goals and objectives with investing may be different from somebody else's, and we always got to take into account of people's situations, because some people may be investing for dividend income, some for dividend growth. CJ says that he's into value investing right now and looking for stocks and businesses in different sectors with good financials, strong brand power, and increasing dividends. He doesn't invest in high yield dividend stocks, but he made an exception for T. Rowe Price because he likes the clean financials and management. So it seems that he's on the right path here. He's on more of a dividend growth focused strategy, but he also does like his value plays as well. He plans to make Visa his biggest position by the end of the year, and he wants to continue adding to it, and he prefers stocks to pay dividends because he enjoys being paid to wait, which I can certainly agree with. There are a few companies in my portfolio that I'm definitely being paid to wait until they recover, examples like Target, Altria, etc. In the last year, we can see that he's had a return of 16.33% on his portfolio, which is very solid. Let's get into the holdings, and I automatically give the portfolio a 10 out of 10 because I see Starbucks and Target in the portfolio. Obviously, though, I'm going to put my bias aside today, and I'm going to give my honest, unfiltered thoughts, as I always try to do. But to start off in the portfolio, he owns 3.239 shares of Kroger stock ticker KR. Now, Kroger's kind of been flat recently as the market has gone up, and that's mainly because of the big cloud that's over it right now with the Albertsons deal and the uncertainty that will go through. That dirty witch Lina Khan is once again trying to block my mergers and acquisitions from my investments. Happened with Microsoft and now Kroger. Lina Khan was dropped on her head as a kid, and it appears that whenever there's a good running business, she just wants to block it, and especially if it's big tech. But Kroger is one of the only companies in my portfolio right now that hasn't ran up in price, and it's kind of unfortunate to see because I do think they are a qualitatively strong business. I do want to do some more due diligence here and try and get higher convicted on this stock before I add more, because I actually do think it is a little underpriced. So with Kroger right now in my portfolio personally, it's a medium-sized holding. They have amazing dividend growth. They've also been toying around with automation a lot recently and AI. Whenever somebody asks me for a stock that's going to benefit with AI, I don't think of Microsoft or Nvidia. I automatically think of Kroger and Starbucks. So those are the real man's AI stocks as far as I'm concerned. But I think Kroger's a strong company right now. It also could be considered a value/dividend growth play. So I think really Kroger kind of covers all of those aspects, and I do like it as a holding. Next, he owns Realty Income, which he owns 5.835 shares of. Realty Income has been a bit of a doozy. Unfortunately, it's been going down a lot recently, along with other REITs because of interest rates, and I think actually right now could be a solid time to buy Realty Income. Realty Income, though, is kind of like bland chicken, as Matt the Dividend Prophet put it. It's going to do the job, it's going to get you your protein, but it's just not the fanciest and best thing. And I absolutely agree. Realty Income is going to continue paying that monthly dividend and even growing it over time at a decent rate, nothing crazy. I will say this though, there are a lot better options in my opinion when it comes to my personal time horizon, but if Realty Income does fall to $45 again, or that range, I will definitely be buying. It will definitely be a medium to long-term play still in my portfolio, but if O ever gets to $65 and $75 again, that's probably when I'd sell out and exit out of my position. Right now though, Vici and Realty Income are producing big dividends for me. I like this holding, CJ, but I would definitely look into Vici. I think Vici offers that same yield, but a lot more growth ahead of it. Next, he owns Qualcomm, and he owns 2.452 shares of Qualcomm. Qualcomm's a really strong business, but I already get enough diversification in it with SHD, so I personally don't own it in my portfolio, but I think it's a really quality company and a very strong dividend growth option. Alright, this is what I came for, and if you're on the Discord and you'd see all of CJ's buys, you would know he's been buying up on this one. It's of course Starbucks stock ticker SBUX, which he owns 1.084 shares of. Now, hopefully as Starbucks continues dipping, fingers crossed so we can buy more, because on this channel we're real man's investors. We don't want great businesses going up in price, we want them going down so we can buy more. Starbucks is an amazing business. I've made literally 15 videos on this channel about why I love Starbucks. I have an entire playlist on it. But to essentially sum it up, I think they have amazing growth in China. Their brand is at an all-time high in my opinion. You're always seeing people paying a premium for their Starbucks drinks, especially at airports where people will be paying $7 to $8 for a medium-sized drink. Absolutely wild. Starbucks' margins are insane. It's just such a great company, and you can watch all my videos on why I love it so much, but I think it's an awesome holding. CJ's also told me he wants to buy a lot more Starbucks, and I can get on board with that. Next, if you thought the party was just getting started, here we go. He owns 1.174 shares of Target. Now, Target was a bit of a recovery play. I remember CJ was buying the stock as it continued falling, and I think it is a bit of more value play, but Target also has some solid dividend growth. How will it be this year? It's going to be really interesting as the free cash flow started to recover. But Target has looked really well recently, and it's trading at $145 now. Well, let's just say I'm happy about my Target investment when I was buying in the 105s and 110s. If I were to go back there again, I'd probably have to buy more. Target's a really strong dividend growth option, and hopefully they start buying back more shares soon. I would really like that. If you're interested in Target stock, I would recommend you check out my Target stock analysis video. I essentially believed it was really undervalued and underpriced whenever it was trading in the 110s and 120s. A lot of people didn't want to invest in the company for sentimental reasons or political reasons. There was a giant discount on it. But I secured a pretty solid yield on cost, and it's paid out well for me so far. Next, in one of the bigger positions in his portfolio, he owns 10.249 shares of T. Rowe Price. T. Rowe Price has been lagging the market recently. They pay a really big dividend and historically have grown it, but recently the dividend hikes have been subpar to say the least. I'll say this with T. Rowe, I was pretty close to buying at one point, but I eventually did realize that there was a big risk of people just starting to invest their own money, and that the fact that money managers may not always be there, I just think it's not the best investment to be in, but I understand where it's one of these positions where he's being paid to wait. I don't think this is the best holding long term. I would definitely like to see you trim out at some point and potential gains, but I do think it is one of those recovery plays kind of like Target, and it could pay off well. Speaking of recovery plays, the next one definitely is, which is Texas Instruments, stock ticker TXN, which he owns 2.135 shares of. Texas Instruments is getting beat up. They're having a massive change in their business right now, and a lot of people are not happy with the amount of capital expenditures they're taking on, and me personally, I'm not really here for it as well. I think long term though, this could kind of play out like Intel. It could be a good buying opportunity, but me personally, I don't love that high capital expenditures and the debt they're going to be taking on with that. And lastly, his last holding is Visa, stock ticker V, which he owns 3.923 shares of, and I absolutely agree with CJ here. I'd love to see him build this up as his biggest position. I even think right now, $270, I still think it's pretty much fair value. If you watch my Visa video that I did a few weeks ago, I essentially looked over the price to earnings, price to free cash flow, and it's actually lower now than what it was at around 220. That's simply because they're growing their earnings at a really quality rate. So that's my opinion on Visa. It's a core holding in my portfolio as well, and I'm definitely going to continue to add a whole lot more if it dips. I like the portfolio a lot though, CJ. I definitely do think there is some room to clean up, as there is with a lot of portfolios that I go over, and myself. I think there's a lot of retail in here, and I think that can be consolidated definitely. I would try to find the best retail companies if you're going to be investing in that. I would just try to consolidate it overall, find a bunch of high quality businesses, compounders you can call them, but also keep your eyes open for those value plays as well. I think they could play out well like Target, maybe T. Rowe. Alright, I want to thank CJ for sending his portfolio in. If you want to submit your portfolio in, there is a bit of a wait right now, but submit it over on the Discord, link in the description. Thank you guys for making the video. Smash the like button, subscribe. Thank you for 2,000 subscribers. Very blessed for that. Thank you very much. Wouldn't be possible without you guys, the fans. Alright, thank you. Check out the Do Dividend Stocks.Drugs merchandise. Smash the subscribe button while you're here, and Do Dividend Stocks.Drugs. Have a good one.